Hey everyone, welcome to Vet It or Forget It. Today we're going to talk about one of the first deals Colin and I did together, and that is what happens when progress on your fix and flip freezes. Literally, I'm Kyle.
And I'm Colin, and this is Vetted Investments. Today, we're going to break down how we stepped in to unfreeze a frozen situation by literally raising $140,000 in just 2 hours.
This is a story of how Arctic temperatures caused major delays in a fix and flip project and how we came through with rapid funding to prevent disaster.
Yeah, so last February, Oregon was hit by extremely cold temperature, right? And that caused all kinds of delays. And what happened was I was actually driving home in my car, and I received this call from an investor. His name is Gage. He's a real estate investor. He's done a ton of deals. He's a fix and flipper out in California, and he was doing one in Oregon. I met him through networking and just in the community. And he called me and he's like, "Hey, do you have anybody? I have a property in Klamath Falls, Oregon. We had some issues." And essentially, he was like, "Hey, we had some delays because of this bad weather, right? And pipes were frozen. What was it, Kyle? Pipes were frozen, water
And they had a
leaks."
pipe freeze. It caused a little bit of water damage. They were able to turn it off pretty quickly, but basically just the cold weather really delayed progress on the house. They just weren't able to. They were just put back behind schedule, basically.
Okay. And he had a couple of private money lenders already in this deal. So this deal was going on for maybe almost a year, I think. And he wanted to make sure that he cashes out his private money lenders, make sure they're whole. He did not want to be late, right? But at the same time, he wants to finish it. So he reached out to us and he was looking for help. Hey, Kyle, can you break the numbers down?
Yeah, of course. So the purchase price on this property was about 80K. It was a small little house outside of Klamath Falls. The rehab budget was about $40,000. So the total loan amount came in at around $140,000. So Colin and I brainstormed and got to raising.
Yeah.
We basically brought in three private money lenders to cover everything in first position.
Yeah, it was funny. When I got home, I was like, we need this 140 to help Gage. And you called me saying that, hey, you found some will lenders. And I said, oh, because that's funny. I actually have a deal right now. So literally, from the time I received the call to the time I spoke to Kyle, we said, hey, let's make the connection, right? And we ended up within 2 hours. We called, I think, Kyle, you called the lenders and presented some of the numbers, and they were good to go.
Yeah, I mean, this deal was great great for my first deal because it was pretty simple, straightforward. It wasn't
Mm.
a huge dollar amount, but it did offer the lenders really high profits and a pretty minimal risk. With such a low purchase price, Gage was in a really good position, meaning the first position lender was also in a really good position, and it was relatively low rehab budget. So, a flash sale of the house in the worst case of a scenario would have gotten everybody their money back. So
Right. So how much was the house worth after it was going to be refi? What's the ARV after repair value?
yeah, I believe it was about 215.
215.
Mhm.
So that would mean that the loan to after repair value is about 65%. Right. So that's a pretty good number to hit the target. So you talked
Right.
about security, Kyle. Why don't you share what type of security documents that we had to make sure that our lenders stayed secure? Because why would three new lenders that you found be willing to jump in just like that?
Yeah, so I already talked about the first lien position. So that is recorded at a county level with a mortgage, and along with that is a promissory note spelling out all the terms of the deal. On top of that, we also do a personal guarantee. So the lender is tying his personal funds into the deal as well and guaranteeing that loan. Additionally, we bring the lenders on as insurees for builder's risk policy. So if anything were to happen during the building and construction process, the lenders are covered as well as the borrower. And The other thing we do is a title policy. So we ensure that the title work that the title company is doing is insured. So if anything ever were to pop up later down the road or when the property is going to be sold, we have insurance against that as well.
100%.
And actually for this deal, we did one additional piece of security, which was a deed in lieu of foreclosure. So what that means is the lender essentially agreed to deed the property over if he defaulted on the loan so that the lenders would not have to go through the foreclosure process.
Yeah, that's amazing. That's pretty secure. First lien position, promissory note, personal guarantee. We had a JV agreement, lender's title policy, builder's risk insurance, and a deed in lieu of foreclosure. 7 security documents or 7 documents to help reduce the risk, right? Okay. So, relationship is key, right? In this strategy, because it's important that, it's not just the deal that looks good, but it's so important that the relationship that we have with the lenders and the borrowers is so key. We always say, we want to bet against, not always do it with a jockey before the horse, right? Because at the end of the day, you can have a really good deal, but if the borrower is not a strong borrower, then you're gonna have issues getting your money back, right? And that's the number one key, is to not lose money and get your money back, right? So what were some of the challenges that Gage had? I know he had, after the issues with the weather, right? Did we have challenges as we went through the process?
Challenges as we went through the process.
Yeah.
No, I don't really actually remember any.
Because they had 2 extensions, remember?
Oh, that. Yeah.
Yeah.
So some of the challenges were, the project wasn't exactly on schedule. Continued to have some delays with contractor issues. A few other, I think it was an electrical issue that popped up along the way. And also the garage. Gage initially wasn't sure if he was going to have to rehab the garage, and it wound up being a complete teardown. So that decision-making process kind of delayed things a little bit, but that wound up being a good thing overall, mainly because Gage kept up communication, made sure that the lenders were aware that things were off schedule the second that he knew they were off schedule. And then he also negotiated an extension fee. So the lenders were able to not only extend the length of their loan, but they got paid an additional fee for extending the loan.
Right. So that's actually really key, because, you want to make sure that everybody wins in this situation, right?
Right.
Opportunity cost, right, of having your money in for a longer period of time. So, the fact that the borrower is willing to add an extension fee, really adds a lot, adds value to the deal itself as well.
Right.
Okay. And then he was trying to sell this house, right? And then what happened? The market slowed down a little bit, right?
Yeah, the market slowed down a little bit. Luckily, we appraised, or when we underwrote it, we made sure that there was a backup strategy, and in this case, that would be a refinance. So there was a good amount of space in this deal, with the refinance or appraised value being around, I think it was like 215 to 220. We only had about 150,000 with extension fees into it. So there was some good room there, with the lender coming in at about 80% loan to value. The backup strategy was still solid.
Yeah. So we ended up, the borrower ended up refinancing. He paid out the lenders and their late fees, the 2 late fees. It wasn't a terribly delayed project. I think it was less than 2 months, under 2 months, right? Delayed. And everybody got their money back. Gage got some money back. The lenders got some money back, and even we did as connectors, right? So it was kind of a win-win situation.
Exactly. A few more wins actually in there, because Gage bought this deal from a wholesaler. So that wholesaler won. I think that wholesaler is also from the community. And then another win on the back end, which was after Gage refied, he wound up selling it to his realtor, or something along those lines, right?
Yeah, it was his realtor. Yeah, his realtor that
Yeah.
helped him this. He actually ended up selling it to him.
Yeah. So the realtor won
Wow.
there as well.
Yeah.
Got a
Oh,
deal.
and the TC, and we had a TC in this
Yeah,
deal.
we
And
did.
he got
Yep.
paid out too. So it was like a win-win-win-win-win situation.
Lots of wins.
That's a win. Ultimately, I think this deal was pretty good. There were some challenges, but like in any other real estate transactions and fix and flips, they don't always go as planned. You gotta anticipate some issues, some delays. We're dealing with contractors. We're dealing with the market, and things are gonna fluctuate. So if you're a new time lender, don't go in thinking that everything's gonna be smooth flowing, right? Anticipate some delays, some challenges, but it's how you maneuver around that, is how you address certain things, and how you actually secure yourself with the good borrowers with the good deal and security of your documents.
Yeah, ultimately, although this wasn't the smoothest deal due to the couple month delay, it was a successful deal. Gage was able to complete the flip. All the lenders got paid back, and like you said, it was a win-win-win-win. So good deal overall.
Awesome. So this is what we strive for at Vetted Investments. Creating profitability, stress-free outcomes. Due diligence on the vetting process and the borrowers, right? And underwriting as well. So
Yeah, so if you're looking to scale your business or need help raising capital for your next project, reach out to us. We might be able to help.
Yeah, and don't forget to like, comment, and subscribe for more tips and success stories.
Thanks for watching, and stay tuned because we've got a lot more coming your way.